Today's tax tip is intended to keep you out of hot water with state taxing authorities. We're talking about economic nexus. For many years, since the 1970s actually, established Supreme Court precedent indicated that you essentially didn't have a sales or income tax obligation to any state unless you had a physical presence in that state. Examples of physical presence inside a state would arise from having an office in a different state, or having employees living or working in a different state, or holding various physical assets inside other states. But we also know that state budgets are constrained and they are hungry for additional tax dollars. And frankly, the way that we do business has changed so much in the last few decades compared to the 1970s that states are finding it much easier to be left out of tax collections because we, as consumers and businesses, are more often sealing the deal remotely, so to speak. A few years ago, South Dakota was fed up with it. They sued Wayfair, an online catalog company with no physical presence in their state, other than frequent shipments made to customers residing in South Dakota. I'll spare you the painful details of the case, but the punchline is that the Supreme Court agreed with South Dakota, and the concept of economic nexus was born. Let me break that term apart. Nexus means an established relationship with. When it is said that you have nexus with California, that means California considers your interactions in California to be significant enough that California wants to treat you like a partial resident of their state, for tax purposes anyway. The old definition of nexus required a physical presence of offices, assets, or employees in a state. This new concept of economic nexus says that you can establish that sufficiently meaningful relationship with another state simply by doing enough economic transactions with clients in their state. The critical threshold of enough is defined by each state and varies in terms of dollars sold, regardless of how many transactions, or the number of transactions, regardless of how many dollars were sold. Literally overnight, the Supreme Court paved the way for each state to declare you have meaningful enough relationship with them that they can require you to collect and remit sales taxes, and in many cases now, be subject to the income tax rates and rules just because you are selling to clients in their state, even if you never step foot within their borders. Before you get too overwhelmed about the prospect of filing sales and income tax filings in over 40 states, let me break down a few suggestions and resources that we widely endorse. First, pull the last year's sales data from your sales and accounting systems and make a list of each state and how many transactions and their respective revenue value in each state. Compare your list to our list of economic nexus by states. Which states from your list meet the nexus thresholds for each state? Second, decide what you want to do about all this information. While there is a measure of exposure when you are conducting enough transactions in a state to establish nexus, but choose to do nothing about it, just know we have several clients that consider the costly burden of compliance to be too high to start filing sales and income tax returns in multiple states. When the exposure across several states is mixed, we often recommend pursuing compliance in the largest 5 states first, when full compliance is too overwhelming. With better systems in place, with your first 5 states, you can migrate to full compliance over time while reducing your exposure to costly penalties. Third, when choosing to be compliant, we recommend TaxJar, an online platform that handles your sales tax compliance with ease and is also cost-effective. Important to note, even if we are not filing your sales tax returns, we need to know which states you are filing sales taxes in, because that will usually require us to file income tax returns to that state also. State tax compliance has become more of a burden to businesses over the last 3 years. We would encourage you to determine your nexus exposure to other states and chart a course towards more complete compliance. If a consult on this topic would be helpful, please reach out and let us know.